welcome everybody to this panel on the future of decentralized finance. It's a pleasure to have you all here, and an absolute pleasure to welcome our two panelists, Roy Zakka, CEO of Layer, a digital banking platform, and Edan Yago, CEO of Sovryn. So I suppose, look, there's a lot of discussion at the moment around decentralized finance and a lot of controversy around it. And I think a lot of scared institutions and central bankers and all sorts. So I suppose my first question, Roy, will be to you. What potential do you think decentralized finance has to disrupt the banking sector, and where do we think that would lead?
Okay. Thank you, James, for that. Well, as you know, it's still early days. It's still Wild West, but theoretically, it removes middlemen, right? Basically, people can trade, they can hold assets, they can borrow, they can lend money, they can exchange value, etc., all without having middlemen, all in an automated fashion with very low fees. So that does, makes the banks worry. It's something they have to worry about. But as I said earlier, it's all a Wild West, and it's still early days. There are a lot of scams. There's a lot of interesting things going on, a lot of, too good to be true things happening, et cetera, et cetera. So it's still early days.
Very good. And I suppose, Edan, over to you on the next question, but where do you see the decentralized finance ecosystem moving to over the next 5 years? What are the possibilities that you can envisage here?
Well, I think two things are going to happen. The first is that we're going to see a significant piece of the current or legacy financial infrastructure be rerouted and effectively remanaged through these distributed systems. There are numerous reasons for this, but two big ones are these systems are global, and finance and money is global, and the ability to transact with lower frictions, with fewer barriers, is extremely attractive, and it's driving a great deal of activity. And that means that current providers don't disappear, but it means that they can plug into this existing and rapidly growing infrastructure. The second reason is that a very large part of the world currently lacks access to sophisticated financial tools and even basic banking. And what we know about prosperity is that if we can provide people with reliable property rights, with reliable dispute resolution, that they, and the ability to enter into a global economy, that they can rapidly increase their standard of living, their productivity, and that grows an economy just by itself. And by having now a global system, which is effectively a system of property rights, which are guaranteed by cryptography, and a system of rules managing those property rights, again, guaranteed by smart contracts, you have a system which is globally accessible to everyone and provides them with basic economic needs, as well as access to the most sophisticated financial tools. And so we're going to see a wave, and already we are seeing a wave of people who previously did not have access to the global economy getting access, and that's going to, in and of itself, generate a large amount of global prosperity.
That's an interesting point, Roy, isn't it? In that, you work directly with banks at the moment in terms of assisting them with their own infrastructure and their own customer interfaces. If Edan's right here, and there's the view that, or a move on that will see I suppose emerging markets being able to build new financial ecosystems from this. That would put an awful lot of the traditional banking sector under pressure. What's your view on
that? We are operating, so traditionally our customers are banks, and that's correct. We help banks digitalize. We help banks, become very modern in their offerings, and it allows them to basically dip into the fintechs that are out there and package those fintech services to their traditional customers. the customers that trust them today with their finances. And the markets that we're operating into today, such as West Africa and Nigeria in particular, they've launched recently in early October. They launched their e-Naira, which is a digital version of their of their currency. So that's a gov currency. So what's interesting about that is the way the central bank is doing this. So they're doing it on a private blockchain. They're minting the coins. They're minting the nairas, those e-nairas, and they're using the banks to onboard these customers. So in order to open a wallet, so it's a wallet-based system. So in order to open a wallet, you have to go through a bank. You have to have been KYC'd and have some sort of account, or at least be EKYC'd by a bank that would allow you to open a wallet. So they are going through the banks, and right now there's no way to cash out of the system, right? So you can maintain e-Nairas, you can move it between accounts, you can do person-to-person payments to businesses, to to government, but you cannot cash it out physically, as in get cash from it.
Yeah. Okay. So central banks in emerging markets are seeing the potential of this already, and making a move to capitalize on that. Edan, I know Sovryn are working on a number of interesting projects at the moment, with countries minting their own coins and tokens and so forth. Where do you see the role in government in decentralized finance into the future, or do they have a role? Do you think that they might be entirely outpaced by the changes?
I think we're generally seeing a trend of diminished capacity for local governments to provide effective regulation, because our economy, our internet, and now the crypto economy, which is internet-based, is increasingly less tied to specific geographical jurisdictions. And so there is an old model where we have, effectively siloed financial systems. You've got the British financial system, you have the US financial system, and now we have sort of like a almost pan-European financial system. But what it replaced was individual European countries' financial systems. And the overall trend is towards global harmonization. And the question is, how do you achieve that harmonization if there is no government which is able to provide that kind of scope? And I think the answer is that because cryptographic systems, because blockchain systems are effectively rule-based systems, they are going to supplement, augment, and over both the short term and the long term replace the geographically based regulatory systems for a more global regulatory system, which will be driven by the users more than driven by specific governments.
Yeah. So to hypothesize on that, I know, for example, let's take Ireland. It's quite difficult to get, I think it's near impossible to get a mortgage from a financial institution outside of the state. So are you saying that with decentralized finance, for example, not only would you bypass the banks, central banks, but you could go direct to a lender in any other part of the world to be able to arrange a mortgage?
Right, so you wouldn't probably even need to go to a specific lender in any part of the world. You would be able to borrow from the world collectively. And so one of the things that Sovryn is working to provide are these effectively bankless mortgages, which can allow people to globally participate in providing mortgages. Now, you need to deal with the assurances of property rights and title, and if there is a default, how do you manage the transition of title so that the property can be liquidated to secure the lenders? Those are not uncomplicated problems, but they're certainly solvable. And they are easier to solve in places like Ireland with good functioning legal systems, and they are more valuable in places without them. And so I think we'll continue to see mortgages in emerging markets with less well-functioning property rights and land registries continue to be more expensive, and those will be higher yield, higher risk loans. And I think we'll also see the same thing happening in better functioning jurisdictions. Now, today interest rates are very, very low, and so you might wonder how a crypto world would be able to compete with that and be attractive. So this coming month, Sovryn is going to introduce zero interest loans, so collateralized loans, but allowing people to start borrowing at zero interest against their Bitcoin, and then additional assets will be added as well. And so I think we're going to continue to see a squeeze of interest rates, and that's going to mean reduced margins, and that's going to mean an even more competitive environment for banks that aren't able to integrate and embrace this new financial system.
That's fascinating. So, Roy, on the flip side of that, if it's a case where we're saying now that, this is potentially hugely disruptive in that, banks which are anchored at the moment typically by borders, if the future is decentralized and people can borrow, as Edan says, globally or from the global market as a whole, building the interface for that is another new challenge. And I see that's where Layer have a potential role here. So would you like to explain how perhaps that might look?
Yeah, so basically, as our name says, we're just layers on top of these ledgers. So we are operating, if you think about it, in the layer 2 and layer 3 maybe of that. So it's still early days, as I said. So I really don't have a lot of what we think is going to happen, but we're definitely helping banks get their technology right, have the right tools to be able to build these types of contracts, to be able to, as you know, these contracts are going to become commodities. They're going to be primitives that you'll be able to get on the marketplace. But there's still who enforces these contracts in the real world. So the laws have to catch up, the regulators, the central banks. So there's still a lot of things that are being worked out in these. And then we always have to be on the lookout, because once you have something like a Fed coin, a US digital coin, then that could make a lot of these stable coins or a lot of these coins not necessarily very useful. With the volatility that they have, etc. You'll be looking more at something that's more stable, and that can make your loans more interesting, because as you know, with these loans, if they're backed by assets that are very volatile, part of the contract is if the currency fluctuates quite a bit, is your assets are liquidated, and it's all done in an automatic fashion. So there's a lot of speculation, a lot of fluctuation. So it's just still early days, but it's very exciting. Things are going to look very different in 5 to 10 years. It's going to be very, very interesting, and we're hoping that we can help a lot of people, with their finances, with their needs, in developing countries, in developing economies around the world, and helping people be included in this exciting decentralized world.
For sure, and I suppose, Edan, Roy makes a good point there, just around the stability and the potential risk. How do companies like yours, Sovryn, for example, balance out that risk for I suppose the early movers on this market?
So I think this is maybe the most important question around decentralized finance. Right now, a lot of decentralized finance does look extremely speculative, and I think to a great extent, it is a casino for many participants. Now, gambling is a big industry, but I think what we're more interested in, certainly what I'm more interested in, is real economic activity and the ability to bring that kind of well-functioning economic activity to the emerging world. And so what's very important is how do you manage this and reduce risks, eliminate systemic risks, etc. And so one of the different approaches that Sovryn has taken is that Sovryn, as opposed to other decentralized financial ecosystems, views itself as a financial jurisdiction and takes that very, very seriously. So Sovryn has a governance system. That governance system, among other things, manages systemic risks that could be introduced, for example, by stablecoins or by having risky leverage within the system. It manages and discourages rehypothecation where they can introduce risk. And so, we're aware of the fact that even our current financial systems, especially our legacy financial systems, are often built as a house of cards. I mean, Bitcoin emerged out of the 2008 global financial crisis. Sovryn emerged out of the 2020 financial crisis, and in response to these things. And so Sovryn is a self-regulating system, which is regulated by the community of users and participants. But central to its mission is providing a rules-based, risk-reduced, and standardized financial setting that all people can participate in.
So you spoke about, I suppose, that Sovryn has established itself as an entity to effectively lend and become an institution in its own right, and you would be again.
So I would just correct that. Yeah. Sovryn isn't an entity, and I think this is an important distinction. Sovryn is a jurisdiction.
Sure.
And we're used to thinking of jurisdictions as sort of being geographically based, but that is a very new innovation sort of in the terms of human history, right? The Catholic Church held jurisdiction over certain things, guilds held jurisdiction over other things in the Middle Ages, and these tended to overlap in terms of geographies. And we're now going back to a world with overlapping responsibilities which have little to do with geography. And so Sovryn is a financial jurisdiction, providing rules-based finance to anyone, anywhere.
And just on that, Edan, and for anyone kind of tuning in for this conversation to really just get the nuts and bolts of this, what we're saying now is in the world of decentralized finance in the not too distant future, you will be able to effectively set up the bank of you if you were a high net worth individual, or if you were a company at large with excess capital, and you can lend into the market in different parts of the world. Is that a correct?
Yes. So, for example, earlier I mentioned zero interest loans, and the reason Sovryn is able to provide those zero interest loans is because there is no intermediary. You are effectively borrowing against your own assets, borrowing against your own collateral. Now, this is something which wealthy people do all the time. Elon Musk doesn't sell Tesla stock when he wants to buy a house. He borrows against his Tesla stock, and the accrual in value in the Tesla stock more than pays for the servicing of the loan, right? So effectively, he is his own bank, right? But he still requires a banking intermediary in order to provide that sort of line of credit. With decentralized financial systems, you're able to provide that line of credit to yourself, and you're able to introduce into the market new stablecoin, which is backed by your collateral, which is effectively exactly what banks do, but now can be done by a sophisticated individual, and soon by less sophisticated individuals. And I think that's where the jurisdictional aspect comes in. As we transition from the early adopter phase, which is full of mostly quite sophisticated users, to a phase of mass adoption, we need to make sure that our systems are in place in such a way that people are not going to introduce risks for themselves that they don't understand. And I think that is a role that banks will be able to continue to play as an intermediary, as a last mile provider, well into the future.
And Roy, I mean, Layer is if this is the future, is particularly well positioned, I suppose, given that you put together these interfaces between banks and their customers. How do you see the future if it looks like this? Is the bank of you something that you could envisage in the future?
The tools that we provide banks with today allows them to build these journeys. So if it is a loan that you're, a mortgage that you're trying to pick up, it basically walks you through through the steps that are required, right? From a legal perspective, documentation that you need, collateral, proof of income, et cetera, et cetera. And these journeys are all built digitally. And basically, they end up touching the ledger of the bank, right, which is their core banking system. So going into the future with a more distributed type of or decentralized type of ledger, then you're looking at similar journeys, but modified journeys that would help those customers, the customers of like Edan, to go and actually acquire those mortgages, but it'll be you'll be picking up directly from those ledgers.
Okay, great. So look, I think we've 2 minutes each left. So Edan, I might take some comments from you. Again, anything that you want to add to the future of decentralized finance, and then Roy, last word then will be with yourself.
So from my perspective, I think one of the interesting aspects for the wider fintech world when it comes to decentralized finance is that it is still quite complicated and distribution remains a challenge. And so last mile providers have an extremely important role to play. Generally speaking, I think when we look at networks, there's basically two places of value. There's the network itself has value, and then there is the last mile provider, which is able to capture a lot of value. In the world that we're moving towards, and if you look at the way the DeFi world currently exists, a lot of the actual financial activity is occurring on the network, but there's still a very, very valuable place for those last mile providers. And I think especially for neobanks, for fintech, for smaller, less entrenched interests, this places them much more at a level playing field with the world's largest banks. And I think it does the same thing for the smaller banks from emerging markets. And so strategically, I think there's a very big opportunity here for for the smaller players to be able to provide the kinds of services with the kind of global remit that today only very, very few incumbents, sort of the bulge brackets, are able to provide.
Great. And Roy, I suppose last word to yourself.
So the power of the platforms that we provide to banks is this ability to package various new ideas, new paradigm shifts, new products and services, and be able to offer them to your average person that does not need to have a lot of sophisticated know-how in investment, etc. So we can very easily take Edan's package or Edan's product and package it in a manner that allows somebody that holds a traditional bank account to be able to participate and use Edan's product very transparently, without having to, go in a Wild West, type of fashion on their own.
Yeah, no, look, and thanks a million for that. I mean, my core takeaway from this is that if I have a few quid, I'll be ringing the both of you to set up my own bank, the Bank of James McCann. But in any case, listen, an absolute pleasure to speak with you both, and a real intriguing conversation around the future of finance. Really, it's been fantastic, and thanks to the Financial Summit for obviously allowing this conversation to kick off. I think it's a very exciting space and something that should be explored. And thanks to all of you who have tuned in for the conversation, and best of luck. Thank you.
Thank you very much.
Thank you.